If the economy and markets aren't scary enough for investors these days, now you got to watch out for the zombie company apocalypse. In this video, I'm going to explain what that even means. I'm going to talk about the rise of these zombies, the dangers, and how you can protect yourself and even take advantage of them at the exact same time. So stay tuned. All right, welcome back. If you are new to the channel, my name is Mark Moss. I like to talk about making money. We talk about investing our money. We talk about the market so we can have success, overall success. If you like those topics, making money, having success, I know you do, click on the like button right now. Helps more people find these videos. Of course, hit that subscribe button if you're not already, and hit that bell notification so you're notified every time I put a new video out. Now today, we are talking about the zombie apocalypse. I know I'm talking about like some movie. I'm talking about real world companies, zombies taking over. And it's pretty crazy. Now, the world seems to have completely changed in only like 3 months. Now, I've been analyzing markets for over 20 years. I started investing at the very bottom of the 89 to 92 market crash. I invested through the dot-com boom and the dot-com bust. I started my first internet-based business at the bottom of that at 2001. I invested through the 2008 great financial crash. If you've been watching my channel long enough, you know the problems that gave me. And all my years of investing, all the studying, all the analyzing markets I've ever done, I've never seen anything like what we're seeing. And you know, I love to study history, so I've even gone way back in history, and yet I've still never seen what we've been seeing. There hasn't been anything like it. We witnessed the worst single-day market drop in history, about 34%, followed almost immediately by a 43% market rally, which is just completely unheard of. And while I've never really seen anything like this, and I was probably just as caught off guard as most of you, I probably shouldn't be that surprised because, you know, I already know that markets are the most frothy at the top. What does that mean, frothy? The most bubbly, the most volatile, the blow off top at any market. So that's the moment when it goes up and then it blows off. At that peak moment as it's going up, it's the most volatile. The chop is the greatest at the top. But the thing that's been the most alarming, and I haven't found anything in history like this, is the rise of the zombie companies. All right, the zombie apocalypse, everyone's worried about it, and now it's happening, but in the companies. And what are the zombie companies? What am I even talking about? Well, just like The Walking Dead, they're Walking Dead companies, and they're scary, and they're cause for great concern. Now, like I said, what the heck is this zombie company? What am I talking about? Well, it's exactly what they sound like, right? Zombies are like The Walking Dead or dead men walking, and today we have companies that are dead companies. They're dead companies walking. They're still operating, but they're technically dead. There's no profits. There's no revenue. There's nothing there. And today, like I said, we're watching a bunch of new events unfold, including a bunch of retail investors that are piling in to these dead zombie companies. Like, what the heck? All right, they're continuing to feed the dead, continuing to feed these dead companies with their money so they can continue to walk around, so they can continue to operate, so they can continue to terrorize more and more people. So let's look at a couple of them so you can understand what I'm talking about. So let's look at a few of them. So one of the best examples is rental car giant Hertz, and they filed for bankruptcy last month. Now, it's no surprise that the travel industry has been extremely hit hard through this whole CV pandemic situation. It's completely wrecked the travel industry. Of course, if you're not traveling, you're not renting cars. But even within the US for business travelers and things like that, nobody's traveling, nobody's renting cars. And so the CV pandemic has really wrecked the travel industry, which again has wrecked Hertz. And they filed bankruptcy, and you know, they were already struggling. They weren't really that good of a company to begin with, but like I said, this pushed them over the edge. And so they filed for bankruptcy. But here's where the zombie comes into play. So they were dead, they didn't have any profits, they filed for bankruptcy. As soon as they filed for bankruptcy, the stock plunged from $3 all the way down to about 50 cents. On top of that, the New York Stock Exchange, where the Hertz stock has been listed, moved to delist the stock from the exchange. The stock had dropped too far, it wasn't worth enough, so the NYSE is like, get this off the list, get this off, right? That's common, it's typical what happens. So basically, what would happen if you're still holding that stock and it gets delisted, it's like almost impossible to trade it, right? There's no exchange, there's no liquidity. I mean, as you can imagine, right? With no market, with no exchange, there's just no market, there's no liquidity. But that didn't stop retail investors from buying it up. As a matter of fact, they piled in completely blind, and they pushed the share price from about, like I said, about 50 cents all the way up to over $5, about 577%. An amazing climb, but it didn't end that way, because next thing you know, it turned around and came all the way back down and free fell from about $5.50 all the way back down to $1.80. So all those investors, all those retail investors that saw Hertz going up and up and up, and $1, $2, $3, $4, and piled in, FOMO, $5, boom, back to $1.80. Most of the retail investors lost everything. I'm talking about an attack of the zombies. Most of the investors that piled in probably lost a majority of their portfolio, and the zombies strike. Now, if that wasn't already enough, the zombies aren't done. So what happened is Hertz was really encouraged, right? They're encouraged by the price of their shares going up. And so they thought, well, shoot, if everybody wants to buy our stock, let's dump $1 billion of stock back onto the market. Let's make these poor, unknowing retail investors buy it up. If they want to buy it, what the heck, right? Who cares if we're in bankruptcy? Who cares if we're being delisted? We'll dump $1 billion on them. Now, you can't feel too bad for the retail investors, because they should have known better. And when I say they should have known better, they should have known better. They need to be paying attention to what they're doing, because Hertz, they had to file for permission. They had to file for permission from the bankruptcy court. And in the filing, they put, quote, those shares won't be worth anything unless those with higher priority in the bankruptcy, such as the company's debt holders, are paid in full. So they told them the shares are probably not going to be worth anything, but yet they still sold them, yet they still bought them up. Now, I don't know what the heck the bankruptcy court is approving $1 billion sale when they know that the stock's going to be worthless, when Hertz is telling people they're going to be worthless. But that's what happened. And like I said, it was this last-ditch effort. They're basically trying to raise enough money by dumping the stock to pay creditors. So they're selling stock for stockholders, and they're paying creditors, because credit, debt, bonds always have the first right. They're always going to get that money first. So basically, Hertz dumped worthless stock on retail investors. They ate it up, and then the stock continued to drop and drop and drop. As a matter of fact, CNBC's Jim Cramer from Mad Money said that he thinks the stock is worth zero. That's right. Now, that's not the only zombie walking around right now eating people up. We have J.C. Penney. Do you remember J.C. Penney? It's one of America's largest department stores. They've been in business for over 118 years. Now, it's been struggling to earn money for a long time. This thing's been a zombie walking around for like a decade. Somebody should have probably put it out of its misery. But it's been walking around like a zombie, like Macy's, like Kohl's, these giant department stores that have just been declining over and over. Like I said, for a decade. Really been hit hard by Amazon, Walmart, other online retailers like that. But it's really been hit hard just over the last couple of years, like I said, because of that. And then right now, especially because of COVID. Of course, nobody can go out shopping. Nobody's going to malls, and nobody's going to JCPenney. And it looks like because of the CV pandemic, JCPenney might finally be done. Maybe that zombie might finally be done. But not just yet, not without taking out some more retail investors. Last month, JCPenney filed for bankruptcy protection to see if they could reorganize the company. Of course, like I just said, under bankruptcy protection reorganization, the creditors, the bondholders, are going to get paid first. Stockholders are probably going to get nothing. But never mind that. That doesn't matter. Retail investors piled into the stock. They drove the share price up almost $200. Now, if that ain't a pump and dump, I don't know what is. Hopefully, a lot of people got out before they lost everything, but most of the people jumped in at the top, FOMOing as it went up. Next thing you know, the price crashes down, the zombie struck again. Now, one of the most crazy examples of a zombie company that I saw, and again, just this week, is a company that's not Walking Dead. It's like Walking Unborn, maybe. I don't know. What I'm talking about is a brand new car company called Nikola Motors. Now, this company, they've never done anything. They're not even a company, they're an idea, and it's not even an original idea. Nikola, as in Tesla, Nikola Tesla, like Tesla Motors, the electric company. So they can't even come up with an original name, so now it's Nikola Tesla Motors. And basically, as the name implies, they're an electric vehicle startup company, and they're developing commercial and passenger trucks. Now, these trucks are, like I said, EV, running off batteries, electrical. And they have some new hydrogen fuel cell tech. Now, they've yet to earn a single dollar of revenue, okay? Now, I'm not talking about they don't have any profit like these other companies. The other companies are losing money, right? But they're losing money, but at least there's like profit. There's like revenue. There's something there. Nikola has zero. They've never sold anything. They've never earned a single dollar, right? But that didn't stop retail investors from driving up the share prices again, piling in. Now, matter of fact, they pushed the stock price up over 100%, bringing the market valuation to over $28 billion. Now, if that sounds like a pretty large amount of money, it sure is. As a matter of fact, $28 billion means that it's worth more than Ford. Now, I drive a Ford truck. I like my Ford truck. They've been around a really long time. As a matter of fact, Ford brought in over $150 billion last year selling cars and trucks. So they brought in $150 billion last year. Nikola brought in zero. But somehow the market thinks that Nikola is worth more than Ford is because it's a zombie company. It's a dead company. There's nothing there, but never mind those retail investors buying it up, hoping to get in the next Tesla, I guess, right? Now, before you jump in, I can already hear the comments down below, and you say, well, that's because Nikola's an EV maker, and that's the future. Like Tesla, it's the future. Okay, maybe. I'll say two things about that. One, yeah, it is, right? EV, it's the future, I get it, right? But valuing a startup with $0 of revenue more than a company that's been around over a century and did $150 billion in revenue last year is completely ludicrous. Number two, don't you think Ford has a bunch of EV vehicles ready to roll out as well? I mean, we know they do, right? We know the new Mustang's coming out as an EV. There's a whole bunch of EV products that Ford's coming out with. So anyway, zombie company, we're going to see what's going to happen with that. But, it doesn't matter to these retail investors. They're just moving in on hype. They're moving in off of adrenaline, I guess. And they're pushing the value of these companies with zero fundamentals, right? Zero fundamentals to sky high revenues. Now, this reminds me a lot of the late 1990s, the dot-com boom. Like I said, I've been through those market cycles. In the late 90s, I think I was about, 20 years old, maybe about 20 years old or so. And I remember at the time we were trading these internet stocks. And I remember my roommate had quit his job and we were, trading these internet stocks and talking to all these people. And these internet stocks, they didn't have any fundamentals either, right? They were brand new companies. We were buying them off of hype. There was no fundamentals, there was no revenue, there's no profits, etc. And so we're starting to see the exact same thing. Like I said, I've been around long enough to see it all come back around. Now I can tell you that it doesn't really end good, but it doesn't stop the bold from giving it a try. It doesn't stop the bold from jumping in to make some quick profits here and there. Now it's definitely not for the meek. Like I said, it's for the bold. But if you want to jump in and you want to profit from it, let me give you a couple tips. Like I said, having lived through this before, I can give you a couple tips of how to survive the zombie company apocalypse. All right, now you need to learn to be able to play offense and defense at the exact same time. Kind of like you'd play like a basketball game. In a basketball game, you have offense and defense on the field at the same time. Football, you're either playing offense or you're playing defense, right? In this type of a market, you need to be like a basketball game where you have offense and defense on the field at the same time. And even if you're trying to shoot offense, you're still being protecting on the defense, etc., right? So that's what you want to do. Now, how do you do that? Well, one, you follow a sensible asset allocation plan. Now, what the allocation plan does is it allows us to swing for the fences, to go for those home runs, right? To get those moonshots. But at the same time, that's the offense, but at the same time, we still have protection. All right. So what are the protection? What protection am I talking about? Well, we'd want to have a portion of our portfolio, of our assets, of our investable assets in cash and gold. All right. Cash and gold are going to protect us in a recession or a depression. Now, I like to call this chaos hedge insurance. And that's your defense. Now, I think you should invest in 4 different pillars. I have a system I call the 4-pillar blueprint. And so chaos hedge insurance is one of the 4 pillars. The second pillar is cash, right? So we want to have gold and we want to have cash. That's 2 pillars. That's the defensive side of the 4 pillars. Now, the other part of the 4 pillars are the offensive side. Now, we want to do stocks. Stocks do really well in a bubble. Like I just said, 500%, 200%, 100%, etc. All right. Now, we want to do stocks. We want to do smart speculations like pre-IPOs, if you can do that, tiny biotech companies, cannabis plays, cryptocurrencies, etc. And that's the offensive position of our portfolio. So when you have it set up like that, you can do offense, you can do defense, you can take the big swings, but like I said, you still have the protection in case it goes wrong. It's like if you went to the circus and you see the guy on the high wire, the trapeze or whatever, and they have the safety net underneath him, right? Now, if you want to understand how to do this, how to set up, I should say, the perfect portfolio, and really the perfect portfolio is one that's custom for you, because my perfect portfolio or allocation is not going to work for you. My custom allocation didn't work for me a year ago, right? It needs to be changing all the time. So you got to set it up perfect for you. You have to understand how to customize it for you. If you want to learn how to do that, I have a download. You can get it for free. I have it linked in the description down below. Thousands of people have downloaded this. Thousands of people have used this to set up their portfolios, all for free. I give this away for free because this cost me millions of dollars. I didn't understand this back in 2008, and I'm trying to keep you from making the same mistake. So I got it for free down in the description down below. Download that. You can basically learn everything you need to learn about how to figure out what percentage you should put where, how to set up that custom portfolio, how to invest in the 4 pillars I'm talking about. And like I said, it's all for free, my gift to you. So hopefully you enjoy that. Leave me a comment down below. Let me know what you think. Are you going to play offense, defense together? Are you still only playing offense like these retail investors and you're not worried about defense? Let me know what you think. And are these people crazy? Are they crazy making these home run bets or not? We'll see, right? I guess time's going to tell. Leave me a comment down below. I'd love to hear from you guys. Give me a thumbs up on the video if you like the video, of course. And if you don't, that's okay. Give me a thumbs down. Either way, just let me know. That's all I got for you right now. To your success, I'm out.